FY2023 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions once the opening remarks conclude. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this call is being recorded. A disclaimer: this call may contain some of the forward-looking statements which are completely based upon our beliefs, opinions, and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. I now hand the conference over to Mr. Manu Talwar, CEO from Mrs. Bectors Food Specialities Limited. Thank you, and over to you, sir.
Thanks. Good afternoon, everyone. To start with, our Managing Director, Anup Bector, has not been able to join the call, so I will start with reading out his speech, and I'll read out on his behalf. So, good afternoon, everyone. On behalf of Mrs. Bectors Food Specialities Limited, I extend very warm welcome to all participants on the Q4 and financial year 23 financial results discussion call. Today on this call, I have with me Mr. Manu Talwar, Chief Executive Officer, Mr. Ishan Bector, Whole-Time Director, Mr. Suvir Bector, Whole-Time Director, Mr. Praveen Kumar Goyal, CFO and a Whole-Time Director, and Orient Capital, our Investor Relations Consultant. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and on company website. Financial year 2023 has been another very strong operational performance, driving healthy revenue growth and strong margins, despite the macroeconomic uncertainties and challenges that the industry has been facing since last few quarters in terms of inflationary pressure, high freight costs, especially in the first 2 quarters. But we continue to witness strong momentum across the businesses as we reported remarkable yearly and quarterly performance and persistent in breaking our historical performance, operational and financial records. Our robust performance was delivered by focusing on distribution expansion, excellence in selling execution, technology intervention coupled with marketing execution, product portfolio optimization and premiumization, and other responsible pricing action aided in offsetting the ongoing pressure from consistent inflation during the year. Company continues to make significant investment on human capital and digitization of our new tracking system and has successfully smoothened the business during the year. I am pleased to inform we have enhanced our presence in new geography and existing territories under both biscuit and bakery segments. We believe the export business to remain strong given the company's foothold in developed and emerging markets such as South America, Europe, MENA region, and North America through a wider range of premium products. In bakery segment, we expect this distribution and premiumization-led growth to continue the success of our brand English Oven in Delhi NCR to other new regions like Mumbai and Bangalore. Under institutional bakery business, we continue to focus on acquiring new clients and leveraging our deep-rooted customer relationships. Updating on CapEx plan, which we announced previously to meet the growing demand for our products across the segment for addition of 2 new biscuit lines at Rajpura, Punjab, is estimated to get completed by Q1 financial year 24. And addition of the bakery plant in NCR is estimated to get completed by the Q2 financial year 24.
Sorry to interrupt, Mr. Manu Talwar.
Yes.
One moment. Yes, sir, please continue.
Okay. I'm reading again from updating on the CapEx plan, which we announced previously to meet the growing demand for our products across segments for addition of 2 new biscuit lines at Rajpura, Punjab, is estimated to get completed by Q1 financial year 24. An addition of bakery plant in NCR is estimated to get completed by Q2 financial year 24. As you're aware, that 2 expansion plans in Dhar, MP and Khopoli, Maharashtra are well in track and expected to be ready in financial year 24-25. I am satisfied with the overall financial year 23 performance of the company with a record turnover and profit. We continue on our journey of strengthening selling and distribution drive to achieve doubling our retail touch points by March 24. The distribution drive would be supported by our robust impact-led marketing, branding campaigns, which would drive the next leg of growth for the company across business segments, supported by a passionate teams to address significant opportunities that lie ahead. Now I will discuss the consolidated Q4 financial performance. The consolidated revenues for the quarter stood at rupees 346 crores versus rupees 252 crores in Q4 financial year 22, thus registering a growth of 37.2% on a year-on-year basis. Biscuit segment revenue for Q4 financial year 23 stood at rupees 203 crores as against rupees 143 crores in Q4 financial year 22, thus registered a growth of 42% compared with Q4 financial year 22, including domestic and export biscuit segment. Biscuit segment has grown by 48% as compared to Q4 financial year 21. Both domestic and export biscuit has grown by higher double digits in Q4 financial year 23 as compared to the same period last year. Bakery segment revenue for Q4 financial year 23 stood at rupees 128 crores as against rupees 95 crores in financial year Q4 22. Thus registered a growth of 34% compared with Q4 financial year 22, including retail bakery and institutional segment. Bakery segment has grown 70% as compared to Q4 financial year 21. Both retail and institutional bakery has grown by higher double digits in Q4 financial year 23 as compared to the same period last year. Margins. EBITDA stood at rupees 48 crores, saw a growth of 89.5% year-on-year. Our EBITDA margin for Q4 financial year 23 was 13.9% as compared to 10.1% in Q4 financial year 22. PAT stood at rupees 27.7 crores, saw a growth of 171% year-on-year. Our PAT margin for Q4 financial year 23 was at 8% as compared to 4% in Q4 financial year 22. Now moving to consolidated financial year 23 performance. The consolidated revenue for financial year 23 stood at rupees 1,362 crores versus rupees 988 crores in financial year 22, thus registering a growth of 37.8% on a year-on-year basis. Biscuit segment reported a revenue growth of 36%, which stood at rupees 807 crores in financial year 23 as compared to rupees 592 crores in financial year 22, including domestic and export sales. Bakery segment revenue in financial year 23 stood at rupees 487 crores against rupees 339 crores in financial year 22, thus registered a growth of 44% year-on-year. Margins. EBITDA margin for financial year 23 stood at rupees 175 crore, saw a growth of 43% year-on-year. Reported an EBITDA margin of 12.9% as compared to 12.4% in financial year 22. PAT stood at 90.1 crores, saw a growth of 57.6% year-on-year. With this, I would request to open the floor for questions and answers. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Prithvi Raj from Unifi Capital. Please go ahead.
Mr. Talwar and gentlemen, good afternoon. Congrats on a great set of numbers. A couple of questions, and I'll go one by one. First up on the gross margin front, Mr. Talwar, it seems to be flat sequentially. So is there a pricing lever available to us that we have not yet extinguished? Or is it a function of high cost inventory that's in our system that's kind of indicating on flatter gross margins?
So, in case of a gross margin, you would have seen that we kind of stabilized our gross margin, and we are equivalent a little better than over last year, and it's in line with the last quarter. So as the prices for the commodities have settled well in the quarter 4, there was no need to take any further price increase in this quarter. And thus, if you look at our gross margin, which is slightly better than last year and is in line with the previous.
Okay, so is it fair to assume that we'll continue with these numbers for the year ahead? Is that the takeaway here?
Yes, so we would maintain and improve these gross margin percentages.
Sure. Two other quick follow-up questions, Mr. Talwar. Is there a blended average capacity utilization number you could share with us for the biscuits and the bread lines? We ask this question because, given your high growth rates, the idea is just to understand how much of incremental elbow room you have for growth in FY24 without having to resort to new lines coming in FY24. I understand there are new lines coming in, but just to understand where are you on utilization numbers?
So our blended capacity utilization as of now should be close to 80 to 83%. And as we briefed you in the opening speech also, so we have 2 lines in Rajpura which will be commissioned in this quarter itself on the biscuit side, which will add 2,000 tons of capacity. And we have another set of capacity which the next quarter on the bakery side will come in the NCR. Alongside that, we have some other projects, which is Kapoli project for bakery. We have MP project for biscuits, which will get commissioned in the next financial year. So if we take into account the capacity which we are investing in this financial year and the next financial year, we have a headroom of going up to almost 24 to 2,500 crores of revenue. So we have sufficient headroom with the capacity which we are building in this year and next year.
Lovely. And just the last question on your exports for Mr. Talwar, we understand the business in a ramp-up mode. Any color on how our initiatives to go direct in the export markets are panning out? How should we imagine this business going forward?
So on the export side, as we briefed you, I think in the previous 2 calls also, we are going very well across the region. But yes, we told you that in the GCC region, we have taken an initiative of setting up our own distribution execution in that region. And that whole effort is going very well, right? And we are investing there. And as we told you, we have our team there. We have office in Dubai. We have now 100% subsidiary also there. So the whole effort is progressing very well, and it's very confident that over the next 2 to 3 years' time, this region will contribute very well for us.
Thank you, sir. All the best. Be in touch. Thank you.
Thank you. Our next question is from the line of Rahul Dani from Monarch Networth Capital Limited. Please go ahead.
Yeah, firstly, congratulations on a great set of numbers, Manu sir. I think the initiatives you took have started to come into play. Just a couple of questions from my end. Just want to understand, so in the bread and the biscuit front, what kind of growth are we seeing from the newer markets we have entered?
Yeah, hi, Ishan this side. So, Rahul, from all our markets, whether it is Delhi with a blended of Delhi and outstation with Mumbai and Bangalore, we're looking at a 30% plus growth, especially in Mumbai and in Bangalore markets. We still see a lot of headroom in terms of ability to grow. With Khopoli coming in, we are also very, we have good expectations coming in from the Bombay market, which will be, I would say, the second largest market outside of Delhi NCR for us in the foreseeable future. So we are happy with our growth, and we're looking forward to our newer capacities coming up in the next 1.5 years.
Sure. And in the biscuit segment?
So again, in the biscuit segment side, you see, as a company, let me sort of preview that we are looking at high teens kind of growth, and we want to sustain and maintain that kind of growth, right? And so biscuit segment, again, with the effort we are putting on the selling and distribution side, marketing side, I think we should continue to grow in high teens on a biscuit segment, and as well as a company.
And so just wanted to check, last year our focus area was to kind of expand our dealership, retail network. So what would be the final touch point as of FY23, and what is the outlook there?
Sorry, can you come again, Rahul?
Sir, our strategy for FY23 was to kind of increase our retail distribution ship. So what is our target for next year in terms of retail touch points?
Okay, so that we briefed last year also. When we started the last financial year, the April of 2014, we had 160,000 direct distribution reach for the biscuit outlets. And that time itself, we said that our target is by March of 2024, we want to reach a number of 320,000. We want to double up direct distribution reach over the 2 financial. And so I'm happy to share that by end of last financial year, in March 24, we were around 270,000 direct reach outlet. And this year we will add another 1 lakh direct reach outlet to achieve our target of 320,000 by March of 2024.
Okay, sir. Thank you and all the best, sir.
Thank you. Our next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good afternoon. Am I audible?
Mr. Harit, may we request you to use the handset?
Yeah, is this better?
Yes, thank you.
Yeah, okay. Yeah. So just a couple of questions from my end. One was on the growth within the segment. So 40-odd% growth in biscuits and 34%. If you could just give us even some qualitative flavor on which segments have within biscuits and which within breads have done better, that would be very helpful.
So firstly, I think you would notice in all the quarters, overall biscuits as a business and bakery segment has quite grown in the same range, right? And within the biscuit also, our exports and domestic again have been growing in the similar kind of range, right? So if overall growth was around 35-37%, so both are within the same range, a few percentages here and there. And similar thing was very true for even our English Oven and the QSR segment. So in terms of both in the domestic and export segment, our effort has been to increase the premiumization. And I must say that we have moved well, both in the domestic and export biscuit to improve our premiumization. Because that's the target of the company, to keep moving up the ladder and improving our realization through, driving the premium segment of the SKUs.
Got it. And just one question on breads. Last 3 years we've kind of doubled our distribution reach in terms of touch points there as well. Where do we see this kind of target? We're currently at almost 35,000. I would assume, given that their premium, our total universe is slightly lower than the overall mass universe for bread. So where do we see this kind of stabilizing over the next, say, 2 years or so? This is for English Oven.
For us, what we are seeing is contrary to what we had believed. Is outstation is actually showing us good results outside of Delhi NCR, which is going into smaller cities. Primarily that the outlet universe would not be there. But as we can see, that even in the bread industry, the premium category of bread is growing faster than the mass category, right? So the growth rate there is there in the industry, and wherever required, to make our distributors successful in smaller cities, we also provide them all the support, even in terms of additional SKU if it's required. I would not give you the number of outlets, because as we are implementing our SFA, we are sort of rationalizing the number of outlets that we believe versus what data is saying. As we get an accurate number of outlets that we are servicing, I'll be better able to give you, the number of outlets we're targeting. But definitely, we are looking at even opening our Punjab market very, very shortly. We have started with we have started with our recruitment drive, and very soon, our products will also be available in Punjab, where we are quite sure, our product range is quite acceptable and is a very, very large opportunity. With the Mumbai market, that clearly is not a very big challenge in terms of our ability to drive further premiumization.
Great. Thanks, Ishan, for this. The third one was on the profitability. I mean, we've mentioned last 2 quarters that we want to stabilize in the 13 to 14% band and then kind of look forward. But last couple of quarters, we've already kind of been hitting the upper end of that band. Just wanted to know, going into the next, say, 12 to 24 months, at least the next 12 months specifically, are we confident that we've kind of stabilized here and, you could look upwards and onwards, or could there be some headwinds to this going forward?
So I think that the intent remains the same, to stabilize around 14%, continue investing in the business and growing the business well in the high teens. So that's the target, and we are confident of achieving the same. And for few quarters, as we have said, that we will then start the journey of 14 to 15 and build up further.
Perfect. And my last was just a bookkeeping. You have mentioned a couple of CapExes for Q4 and some investments going into FY25. Some of it will partly be made in 24. Just wanted to know what would be the absolute CapEx number that we are finalizing for FY24?
In the financial year 24.
Financial year 24.
24, our CapEx should be close to 120 crores.
Perfect. That's it from me. Thanks and all the best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Amit from Elara. Please go ahead.
Yeah, thank you very much, and congratulations for excellent results. Sir, you highlighted your distribution strategy still continues, and last time we discussed, you talked about efficiency and fleet on the street that helped you to drive growth. Do you think there is further room for, fleet on the street also going up? And also, I wanted to know the ad spend part of it, because what would be the ad spend for the full year FY23, and are we looking to increase our ad spends?
Yes, so we achieved our target of having a fleet on street of approximately 850, which are there. Yes, as we expand our distribution, as we go deeper, as we expand our geography, we will be adding feet on street, and thus there is a plan this year also to add feet on street, because that's the only way to drive your distribution. And I just wanted to clarify that this is a strategy which will continue for next few years, right? It's because if we have to expand, we have to become a pan-India player, we have to get into new geographies, go deeper. That's the only way to do it, and we would continue that journey.
Sure. And just to follow up on this is in terms of the growth rate which you are highlighting in terms of teens, given that the momentum is similar, wouldn't that be kind of on a higher number than probably what we are looking at? Or
it will be higher teens, not just teens or lower teens. And our target is always to stretch and do better. But as of now, we had an outstanding year and a very large growth. So we would like to maintain a high teen kind of growth consistency in this particular financial year. But yes, definitely aspiration is always to cross your own target.
And any signs that you are seeing in terms of market dynamics wherein you are while you are getting into new markets, so for you its competition is not so critical, but just to understand how is the market scenario generally in the biscuit category, where pricing is being passed on to the consumer, or you still think that the price value equation for a consumer is now good enough for a biscuit? Have we taken any price cuts in Q4, and any plans in doing it in Q1 or going forward?
So biscuit is a very, very competitive market, as all of us know, right? And we normally follow and watch our market leaders in the market, whether any kind of price correction, both upward and downward, which has to be taken. Prices have definitely stabilized in the quarter 4 of the last financial year, and thus we haven't taken any kind of price increase in this quarter. And even from a consumer perspective, prices have fairly settled down. So we will see as we progress how the industry is kind of reacting, because we being not a very large player, we will have to be market competitive with our product and prices.
Sure. So there is no pricing action taken in April and May, is what I wanted to understand, at an industry level also.
Till date, we haven't taken any pricing action.
Okay. And ad spend, could you share some pointers on that? I mean, FY23, what was as a percentage of sales, and how do you see that going forward?
So overall, our spend are around 8% between BTL and ATL. And on the ATL side, we briefed you last year from the quarter 3 of last financial year, we had enhanced our spend on the marketing side, and we are maintaining a spend range of 2.5 to 3%, which is on media, which is on outdoor, which is on print, and on and infra. So these are the 4 verticals of spend which we do to build our marketing. And as we scaled up from the quarter 3 of last financial year, we continue to maintain that in the range of 2.5 to 3%. Rather, this year we started extremely well. I'm sure some of you had a chance to kind of look at it on a bakery side. We had a very good campaign on the Mother's Day, right? So marketing calendar is well planned for this year for the company, and we have initiated execution of the same from the month 1 itself.
Sure. So in the context that we may probably keep it same, right, is what I understand, 2.5-3% of sales as the ad spend.
Yeah, as of now, we're keeping it around 3%.
Sure.
But as the year will progress, depending upon market situation, our ability to invest more, we will take a decision.
Okay. It's helpful. Thanks a lot.
Thank you. Our next question is from the line of Samir Gupta from India Infoline. Please go ahead.
Hi, sir. Thanks for taking my question. 2 questions from my side. First, this 42% growth that the company has done in biscuits, and you said that it is broadly in line between domestic and export. So can you give 2 sets of breakups here in domestic biscuit growth? One is volume versus pricing, YOY basis. And second is in terms of overall growth, how much has the core markets of our, where our market share is high, let's say Punjab, Haryana, Himachal, versus the newer markets that we have been entering. So just these 2, granular details on domestic biscuit growth, if you can.
So, firstly, as I said last time also, domestic and export both have grown in the same region. Now coming to the domestic side, just to share with you that our market share is high in the upper part of the north, which is Punjab, Himachal, Jammu, J&K, where we again had a good high double-digit growth. But yes, definitely in the lower part of the north, which is your Delhi, UP, and Rajasthan belt, where we were investing heavily on distribution, because those were not so strong areas for us, they have definitely given a much higher growth. So the growth in the lower part of north is much higher, which was also expected and should be there, because our share is low there. And so on an overall basis, in north, we moved our share from 3.8% to 4.6%. And our share growth was much steeper and higher in a place like Delhi, where we moved from 2.9% to 4.7%. And similar was the case in UP and Rajasthan, where both the shares moved up. And even in Punjab, where our share was higher, we moved up from 13.6 to 14.5%. So yes, on a growth perspective, lower part of the north, which is Delhi, UP, Rajasthan, had a much higher percentage of growth. But yes, we had a good high double-digit growth even in the upper part of the north.
And sir, volume versus pricing this quarter, YOY?
Okay. Volume versus pricing, very simple, that in a whole biscuit segment, between exports and domestic put together, our growth would have been approximately 12% from the pricing and balance from volumes.
And this 12% is similar across export or domestic, or there is a wide difference?
Export is marginally higher than domestic on pricing.
Okay. And one follow-up here, sir. You said 4.6 market share in the north. PPT mentions 5.4%. So why is there a difference?
No. That 5.4% which you're reading on the left-hand side corner up is the premium contribution. If you look at that slide,
Okay.
the presentation, that's on the premium product range side.
Got it, sir. Last question. Capex, you mentioned 125 crore in FY24, 120. Can you give a similar guidance for FY25 also? I believe there are some greenfield projects lined up.
Yeah. So we are in the process of finalizing the final amounts there. Right. In the next quarter meeting, we'll be able to share the exact amount, which will be for 24-25 financial year.
Thank you. Mr. Samir Gupta, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Our next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, thanks for the opportunity and congrats on good set of numbers. Couple of questions from my side, sir. So you spoke about feet on street strategy for domestic biscuit category in terms of thrust on that part along with direct reach expansion. So just wanted to know the technicality here. Is this expense of feet on street is routed through our P&L or is it through distributors' P&L?
It is on distributors.
Distributors P&L. And just second, as we enter hyper premium market of Maharashtra, Karnataka, what is the strategy to get shelf space? Because it is very competitive market. So is it higher discounts or is it higher schemes? How do we entice the existing shelf space to be replaced or to get shelf space for ourselves versus the existing brands there?
Okay, just brief you that we launched in these three cities of Bombay, Bangalore and Pune towards the beginning of last financial year. And, our strength is our product quality and product. So we are neither over discounting there, not pushing anybody. We are placing our product on retail. We are executing it well through merchandising. And so it's pretty happy to share in that in all the three markets, we have now reached a presence of almost 17,000 outlets in these three cities. And happy to see that in just a short period of some 9-10 months, our numeric availability or numbers are very well showing even in 18 weeks report. So we play on our strength of good product and good quality product, which consumers enjoy. So primarily we are building a distribution expansion. We launched in 3 cities in the last financial year, and this year we will be launching in couple of more cities in the year financial year 24.
Sure. And so trade terms also remains the same here in terms of receivable days and others?
Yes, almost similar trade terms, yeah.
Okay, that's all from my side. Thanks a lot.
Thank you. Our next question is from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah. Good evening, sir. Thanks for giving me the opportunity. Congrats for good set of numbers. So my question is on your bakery plant expansion in Khopoli. So can you help me with the capacity you are coming over there? Because last quarter I believe you said that you are still yet to come out with any particular plan. But have you decided on how much the capacity you are planning to put in Khopoli?
So here in Khopoli, we are looking at a very state-of-the-art infrastructure. We are looking at the kind of lines, which are very, very efficient, very large production lines. In fact, we are now just about to close our capex plan on these fully automatic lines, which will either be between 4,000 breads per hour to 6,000 breads per hour. These lines are going to be fully automatic, very, very less manpower, untouched by hands. So it's going to be a significant capacity expansion. And for us, in terms of, let's say, scale, we would envision our Mumbai factory to be as big as Delhi in terms of capacity.
Okay. So that will give a significant scale for your bakery business over the next 2 to 3 years. If a facility comes on board in FY25, then it should give a significant scale over the next 2 to 3 years for you.
Yeah, it will give us a long headroom to grow. Yes.
Okay. And correct me if I'm wrong, bakery business have little better margins compared to your biscuit business. So if the contribution of bakery business continues to improve, will that be additional lever for you in terms of overall margins to improve in the coming years?
Just to share with you that our effort is to improve margins in every business. And we haven't able to do the same in the previous financial year, which was 22-23. And as our biscuit division has grown more, slightly more than the bakery, so bakery contribution has remained stable, over in 22-23 versus 21-22. So, but yes, our improvement in margins. So we as a company, which we have kind of stated in our earlier calls also, that we are equally focused company. For us, revenue and margins are equally important. While we step up and invest in distribution, marketing, which leads to good growth in revenues, our focus on cost efficiency and margin remains as strong as revenue.
Okay, got your point, sir. Thank you.
Thank you. Our next question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, sir. Thank you for taking my question. So just wanted to understand, in these 3 cities that we penetrated in FY24 with 17,000 outlets, what would be the volume sales for biscuits?
So volume for the last financial year was not much, as we were just in the process of opening outlets and servicing those outlets. But we kind of very confident that it's a too early statement to make, but I think that the South and West should start contributing well in next 2 to 3 years' time as a contribution of domestic biscuit sales on an India basis. As of now, we would kind of completely agree that the first is a journey of seeding, right? Opening more cities, opening more outlets. Now look at Bombay, Bangalore, Pune, they are very big cities. So for us to, in the first 9-10 months, to have our products built in 17,000 outlets and servicing customers from there, it's not an extremely large number, right? So we will be opening more cities in this financial year and adding more outlets in these 2 cities. And these sales will start adding. And in the South and West, I must add that we are also penetrating faster and very well through modern trade channels. And there will be a significant effort also in the financial year 23-24 to penetrate much faster than general trade through the modern trade on the domestic biscuit side.
So just to understand this, the growth that you've shown on the biscuit side, just want to understand how much of it, on the volume growth side, how much of it would be through organic route and how much would be through this, the newer geographies that we have penetrated. So maybe some color you can give us on Delhi, or like you mentioned, the upper north, how much was the volume growth there?
The first thing is that growth is primarily from northern India. Bombay, Pune, and Bangalore have hardly contributed to the growth because we were into just placing our products and penetrating our products and starting our journey in this area. Second, the growth which we got on the domestic side, I would say around 9 to 10% would have come from the price, and the balance entire growth has come from the volumes. So large part of the growth in last financial year of financial year 23, it is volume driven.
Right. This is much higher than the industry growth. I understand this, the market share numbers which you've shared. So, but
Much
just
higher.
Right. Okay. Thank you.
Thank you. Our next question is from the line of Amit Kalyanpur from East India Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, the capacity expansions which have been mentioned at Rajpura, NCR, MP, and Khopoli. So what will be the respective capacities at these places, the additional capacities that is?
So, Rajpura will get commissioned in next 2 months' time, and Rajpura we are commissioning 2 lines. So it will give us 2,000 tons of additional capacity a month. Khopoli will take some time. Khopoli capacity will get added only towards the later part of next financial year.
So at NCR, what will be the capacity addition?
For NCR bakery?
Yeah. In terms of
we have capacity to by about 80,000 breads a day. And in Khopoli, it looks like it would be about 120,000 a day.
Okay, and at Dhar, MP?
Dhar is a biscuit line.
Biscuit line again in the Madhya Pradesh, Dhar. We will be starting there with 2 lines. So we will be starting there with approximately 2,000 tons a month. And as we have a large area there, so we will keep expanding as we need to, put up more lines to fulfill our demands in future. But we will first start with 2 lines there, approximately 2,000 tons.
So it's 2,000 tons per month?
Yeah. Yes.
Okay. And what will be the debt for this capex that you have planned? The 2 capex, any additional debt being planned, or it's from internal accruals?
So overall, on the funding of our project, we have kept a ratio of some 65 to 70% of debt and the balance through our own funds. That's the kind of ratio we are maintaining. But just to give a comfort to all of you that even if you look at our ratios, our debt equity ratio, which was 0.27 if I'm right, last year has further improved in the financial year 22-23 to 0.22. So we're fairly more than comfortable on our debt equity ratio. And but yes, for financing of these projects, we're keeping around own funds of 30 to 35% and borrowed funds of around 65 to 70%.
Okay, sir. Thanks. Thank you. That's it.
Thank you. Our next question is from Naveen Bothra from Shubh Labh Research. Please go ahead.
Yeah. First of all, congratulations for excellent set of numbers. My question is to Mr. Ishan. Regarding we have talked about investment of rupees 1 crore in our wholly owned subsidiary. Bectors English Oven Limited. So,
Mr. Naveen, may we request you to use the answer?
Okay, just a minute. Just. Hello.
Yes, sir.
Yes.
Go ahead, please.
Yes. So, my question is regarding this 1 crore investment in Mrs. Bectors English Oven Limited. Is it related to Backwalk Cafe? And if you can throw some more light on our vision about the Backwalk Cafe, it will be quite helpful, sir.
Yeah. So, for the longest time, we've been talking about developing our frozen bakery range of products, right? And in English Oven, we've always thought of ourselves as more of a bakery company rather than just a bread company. Bread being a large part of the portfolio, but that value addition coming in from bakery. We actually, in a way, have all the right or the necessary products for a company today to sort of open up a cafe. Whether it is a pizza, whether it is a burger bun, whether it is a croissant, whether it is desserts like muffins, cakes, etc. So we had the whole bouquet of products, and with the entire concept of bakery, that's where we had incorporated Bectors English Oven, where we have set up 4 cafes which are using almost the majority or almost 80% of the bakery products captively from our range of products that we have out there for the market. So that's what Bakewalk has been about. We have about 4 stores. It is still at a very nascent stage, and we are very excited about the opportunity and also showing to our customers that English Oven can be a one-stop solution for everything bakery that would be required to open up a cafe anywhere in India.
So these 4 cafes are in the Delhi NCR region, Gurgaon and all these things.
Yes.
Company operated model. So if you can throw more light about the franchisee as well as COCO, how in the next 1 or 2 years, say, the ratio will be how much between the COCO and franchisee-led models?
We haven't really thought that far ahead. Seeing our model and the success of our model, we have gotten franchise queries, but we are first focusing on building a strong brand, opening more number of stores, and I think that is something that what we will work on at a later stage.
Thank you very much, sir. All the very best.
Thank you. Our next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good afternoon, sir. So my first question is, so we have gained market share on the biscuit side. Any sense, are we gaining market share from the players like, Britannia or Parle, or more like tier 2 players like Anupam and Surya in those geographies?
So, we are still very small player. If you look at, I shared what is a North India market share gain, right? And if I look at that number on an all India basis, our market share would be just about 1.39%, right? So, I'm sure there'll be some marginal gain from different players. It's very difficult to say that it's coming from a regional player or from the large players.
Okay. Specific categories where we are doing much better, or it is like across the board, we are doing equally well.
So as we were focusing more on the premium segment side, and so we have seen that we are doing well there, and that's the whole objective, that we build our premium segment both on cookies and creams.
Okay. And second question is on institutional bakery side. On that segment, any new products that that we have won with our existing customer where we are kind of scale up mode, and also QSR segment in general, because of the overall discretionary spend slowdown, is going through a challenging time. So are we seeing any challenges on that front for us?
See, with our existing customers, we are working on a couple of projects. These are ongoing projects, so it's not the time for me to really speak about them. But yes, on the sweet side, on the dessert category, we're expanding our portfolio, which is helping us increase our presence with some of our partners. We have also started working with a couple of new concepts with one of our customers. We are supplying now frozen pizza dough balls. Not a pizza itself, but a frozen pizza dough ball. But what we are seeing is that over time, even on the QSR front, the acceptance of frozen products is becoming very good. We see a very bright future for this industry. I think the focus for us has to be to execute world-class R&D, at a scale, and that's where we are focusing on. I'm very sure that we will be able to add new customers sequentially, and we have a very strong line of products that we are working on. So that's there, and I think on the QSR space, I think whatever slowdown that we see is probably going to be very short term. The point is that there is just so many opportunities in terms of to add number of stores, and what we also see is that even our customers, they seem very bullish on the number of stores that they are planning for the next 3 to 4 years in terms of store additions. So, we are very optimistic about this business, and we have, a lot of, I think good times ahead.
Okay, great. That's it.
Thank you. Our next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Sir, congratulations on a strong set of numbers. Sir, this is regarding, in the Q3 FY23 call, if I'm not wrong, you did say that we are, moving towards 13 to 14% EBITDA margin, and we are here, and we'll be targeting something like 14 to 15% margin in coming quarters. So just wanted to understand how are we placed as of now, because if I'm right to understand, we have not actually taken any price hike as such compared to quarter 3, right, due to the raw material price stabilizing. So just if you could tell me.
Yes, so as we said in Q3 also, that over the next few quarters, we would like to stabilize and deliver 13 to 14% EBITDA. We have delivered close to 14 in last 2 quarters of the last financial year. And I think it's very important for any organization to bring that stability of delivery. The whole objective should be to bring that stability of consistent delivery of around 14%. That's why I keep saying 13 to 14% EBITDA. And then once we stabilize this level of EBITDA, obviously the next step will be moving up from a 14 to 15%. So we stick to what we said. Yes, we have delivered close to 14% in last 2 quarters. Objective is to sustain and maintain that consistency while working on the growth side, and then take a next step, prepare for that next step, and move towards 14 to 15% journey.
Okay, but would this movement from this 14 to 15% would it be primarily due to premiumization?
So it's yes, premiumization of our revenue and our product is a key contributor to that journey, but that's not the only reason. It's the revenue growth, working on cost efficiency are other 2 big elements which are drivers to the margin improvement.
Right. Right, sir. Right, sir. Yeah, that's all from my side. Thank you, sir.
Thank you. Our next question is from the line of Prateek Kapoor from Pro Invest. Please go ahead.
Hi. Thanks for the opportunity and congrats on good set of numbers. Just two questions from my side. First, what is your view on wheat crop going forward?
Prateek Kapoor, sorry to interrupt. May we request you to use the handset?
Hello, am I audible now?
Yes, sir. Please go ahead.
Yeah. So just two questions from my side. Firstly, what is your view on wheat crop going
forward? So, I think on the wheat crop, early Jan, Feb, we had good announcement that crop is good. We had record production in India. Then we had some challenges in the later months of Feb, March that, there were unseasonal rains which was kind of impacted. Things seems to be stable now. I don't have an expert view on this, so I would not like to comment any further on that. So we see some bit of stability now, as of now, on the commodity on the wheat side. That's what I will, stick to at this point of time. Won't be able to comment on any further on this particular subject area.
Kind of asset turns we can expect from upcoming addition of new biscuit line of Rajpura and bakery line of NCR once commissioned in Q1 and Q2 of FY2022?
You see, on an average asset turn for our company with so much of investment going in, will as of now stay around 3. We have a better asset turns on the biscuit side, which is 3.5 to 4, and on the bakery side 2.5 to 3. We would maintain those kind of asset turns because you would appreciate that the way we're growing and also investing, and investment by the time any investment takes time to stabilize. Is always at a lesser percentage of utilization, and then it grows to higher level of utilization. So yes, we would maintain our company asset turns of approximately around 3.
Okay,
thank you. Lower on the bakery side and little higher than 3 on the biscuit side.
Okay, thank you. That's it from my side.
Thank you. Our next question is from the line of Vidhi Dadia from Radiant Securities. Please go ahead.
Good evening, team. Thank you for the opportunity. Sir, I just wanted to understand one data point from you for the newly entered geographies of South and West. What is the size of opportunity there in terms of number of retail outlets, and what is the potential target reach for the next few years?
You see, South and West of India for biscuit industry is the most premium market, right? And the size of revenue as an industry of South and West is equal to more than North India, right? So as an opportunity, is a very big opportunity
I wanted to understand, the data point, just a data point, the number of retail outlets which these geographies have.
So I will have to get back to you on that. See, what is the outlet universe of South and West of India? I don't have ready in hand that particular part of it.
Sure, sir. And how are we, what are the number of outlets that we are looking to add quarter on quarter or yearly in these geographies?
So, in the coming financial year, which is the existing financial year of 2023-24, we expect that we should be able to almost double our outlet presence in South and West of India by growing in the same city and entering the new city. That's the target for this existing financial year 23-24.
Okay, so that's great to hear. All the best for the future. Thank you.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Amit Kashyap from Shubh Labh Research. Please go ahead.
Hello. Hello?
Yes, sir. Please go ahead.
Hello?
Mr. Amit, can you hear us?
Am I audible?
Yes, sir. Your line is unmuted. Please go ahead.
Yeah, so I would like to know the margin profile for the frozen product and the current percentage of share of the frozen product in our revenue.
Sorry, you're not audible.
May we request you to use the handset, Mr. Amit?
Just a minute. Am I audible now?
Yes, sir. Please go ahead.
Hello?
Yeah, please go ahead.
Yeah, my question is with regard to the management profile, sir. That what is the margin profile for the frozen products and the current percentage of share of frozen products in the revenue?
So, frozen products are still at a very, very nascent stage for us. Our largest customer for the frozen side would probably be, somewhere where we are providing the frozen stick. But on the margin side, we don't share individual margins of businesses, whether it is on the bakery or the biscuits. So, we'd like to sort of keep it like that.
Okay, sir. And one follow-up only, sir, that the additional product line which we are introducing in near future. So, what time we can expect a break even for that?
Can you repeat your question?
Sir, the additional product line which we are adding in near future in the Rajpura area for the biscuit capacity, at what particular time we can expect a break even for that particular product line? The timing period may be the 6 months, 9 months.
The new lines which we are putting on a bakery and biscuit side has a payback period of approximately 7 years.
Okay.
So that's the way we calculate. It has a payback period of approximately 7 years based on the current forecasted sales over the next few years.
Okay. That's it from my side. Thank you.
Thank you. Our next question is from the line of Rushabh Doshi from Nimiti Investment Advisors LLP. Please go ahead.
Yeah. Congrats on a great set of numbers. So I just wanted to understand, what is our presence for modern trade and e-commerce, and also like in modern trade for both bread and biscuits, like in which geographies are we currently present in, and how well is this trade segment growing for us?
So, on the modern trade side, we are present in about 2,300 outlets this year. Our target for the next year is to be present in almost double the number of outlets, which is about 80% coverage of the number of doors. On the bread side, we are primarily listed with almost all modern trades and e-commerce in Delhi, Mumbai and Bangalore. And we have also now started, in fact, signed national DOTs with a couple of companies, and are endeavoring to sign all across, which will help our penetration into the trade e-commerce across India.
So how big is this trade segment in our domestic business for both bread and biscuits?
Sorry, can you say again?
How big is this trade segment in our domestic business for both breads and biscuits, the modern trade and e-commerce?
So modern trade e-commerce for biscuits, I would think would be around 14%.
So biscuits.
And on the biscuit side would be around 11%.
Okay. Yeah, that's all from me.
Thank you. In the interest of time, that will be our last question for the question and answer session. I would now like to hand the conference over to Mr. Manu Talwar for closing comments.
Thank you everyone for joining us. I hope we have been able to answer all queries. In case you require any further details, you may please contact us or Orient Capital, our investor relations partner. Thank you.